A lot of what we do in our day-to-day financial lives, there will be a stablecoin involved, whether that's we're sending money abroad or whether that's because we're executing a trade and the settlement's happening behind the scenes, or whether it's because we're actually sending peer-to-peer payments. We will all interact with stablecoins at some point, but most of us will be unaware of it.
The next chapter of crypto might not be written by the degens, but by the insiders who helped build the old system. Today's guest is James Brownlee. He's a former banking lawyer who spent over a decade working with global clearing banks and top-tier law firms in London's financial district. Now he's the co-founder of Harbour, a company solving one of the biggest bottlenecks in crypto, moving money from your bank to your self-custody wallet instantly. And this conversation couldn't come at a better time. With BlackRock entering tokenized treasuries, Stripe integrating USDC, and lawmakers pushing multiple stablecoin bills through Congress, the narrative is clear. Stablecoins are becoming the rail of tomorrow's financial system. James understands both sides of this bridge, TradFi and Web3, and he's building the infrastructure that connects them. Let's get to it. James, welcome to the show.
Thank you. Great to be here.
Yeah, so let's start with your background. You spent over a decade in the heart of TradFi as a banking lawyer. What made you leave the world to join Fintech and then eventually into crypto?
Yeah. So I was a global payments and trade finance lawyer in the city of London for about 11 years. So I was working in global transaction banking, which is how the bank works with other banks to move money around the world. And then also on the trade finance side, how companies work with the bank to move money around the world. And kind of being at the heart of that kind of those global financial operations, seeing what's kind of how this is built under the hood, how these correspondent banking networks are like knitted together in this kind of strange patchwork, how much bureaucracy, how much paperwork there is in global money movement and trade finance in particular. When I saw stablecoins for the first time and how they enable this kind of instant global peer-to-peer settlement, that background and all those pains that I'd seen and felt kind of instantly felt like this is the solution. And that's what started me, kind of pulled me down the rabbit hole and started me on my path to working in crypto and Web3 and with stablecoins in particular.
And how would you say your legal experience influenced how you're building Harbour today?
Yeah, a couple of ways. So I think as a lawyer, you're necessarily really deep in the weeds of how things work. So when you're writing these agreements between banks for how they cooperate to settle transactions and things, you get a pretty good deep understanding of the mechanics of that and then nuts and bolts, which is really helpful when you're trying to design a sort of new version of that. But then a second way, I think, is really the fact that I'm really attuned and really focused on regulatory development. So I think probably more than most founders, I spend a lot of time thinking about how regulation is developing, what the patterns are, what that horizon looks like, and how it's going to affect our business. But importantly, what are the opportunities? Because I think regulation brings opportunities as well. So I think that, there's a couple of ways that sort of being a lawyer helps there.
You've been investing in crypto since 2018. How has your perspective shifted now that you're actually building in the space?
Yeah, so I started investing in ICOs, maybe like a lot of people, lost a lot of money in ICOs, but it was just really the interest in what Ethereum was bringing to the market at that time. The first time I saw a smart contract, this promise of actually being able to disintermediate financial services. And I think that's what got me interested. That's what got me involved in the space. And I think that has taken a long time, a much longer time than I thought to come to fruition. We're genuinely now re-architecting the financial system. I thought that might happen more like 7 or 8 years ago. But then now the speed at which that's happening that's what's really exciting. And I guess that's what's surprising me. So I think it's taken us a long time to get here, but the trajectory now is just like it's exponential. It's just so exciting, the rate of change at the moment.
Let's take a step back for those that may not be familiar. What is Harbour?
Yeah, so we're a stablecoin payments platform based in Europe. So we provide a number of services. We allow people to very seamlessly, easily transfer between money in their bank account and stablecoins on chain, stablecoins on chain back to money in a bank account for businesses, consumers who want that experience. And we are about to launch a new product which is around global payments. So using stablecoins to fix that horrible correspondent banking problem I mentioned earlier. How do we make that better with stablecoins as a new way of moving value?
So the whole bank to wallet transfers, I mean, it's been a challenge for years. Why hasn't anyone really cracked it just yet?
Yeah, so we looked really closely at this before deciding to spend a lot of time and sort of building this space. Because on and off ramping it's a pretty busy market. There are lots of different people who do that. But what we realized is the way they were approaching it and thinking about it was more like buying and selling crypto problem. So it was using a lot of cards to just buy some crypto, sell your crypto and get money back. Whereas we started to think about it as a payment. So it's kind of moving money from a bank account with a bank transfer, which then settles to a stable coin on a blockchain. We need thinking about how we make it much cheaper by eliminating expensive card fees is a core part of that. How we make it much faster by using real-time payment rails. So really kind of taking that, I guess, deep payments knowledge and kind of building from the ground up. Okay, what does payments with stable coins in particular look like when it's going to be at TradFi scale? And we just didn't think it was buying and selling tokens with cards. And we thought that model was kind of serving a different market, a market which is kind of changing rapidly.
Now, you've called stablecoins a generational opportunity before. Why now? What makes this moment so critical?
Yeah, I do think it's a generational opportunity. So a lot of the innovation in financial technology to this point has been around trying to create better user experiences or differentiated products on top of existing financial infrastructure. We've been bound to the old rails. We've been bound to the frictions and the inefficiencies and the costs that those old rails bring. And stablecoins for the first time bypass all that. So with stablecoins for the very first time, you can move stable value without having to touch that old legacy system. And that opens up a huge opportunity space for people to build in. I think it's happening now because we've got to the point where there's starting to be sufficient regulatory clarity for stablecoins in major economies. The EU has their own stablecoin regulation now. US is pretty far along with theirs. A number of different bills in the UK coming globally, and that brings legitimacy, enables institutions and businesses to participate, which is crucial to make this happen, in the real world at scale. But also the infrastructure is there now. Like we have really fast, efficient, scalable blockchains that can move this value instantly at a low cost. And when you kind of combine these things together, it's like this is the moment when we can actually make global money movement at the scale of Visa, at the scale of the correspondent banking system, but much more efficient done on chain with stablecoins.
It sounds like it's a combination of the technology and the regulatory framework. And on that note, the U.S. House just introduced the Stable Act, and in the Senate, the Genius Act is gaining a lot of traction. Although some lawmakers are still seeing stablecoins as a threat, while, as you mentioned, others are seeing it as a path forward. How do you view these developments?
Yeah, I think taking the US and the EU as an example kind of shows that bifurcation in perspectives. So I think in the US, the new administration sees stablecoins as a massive opportunity for extending dollar hegemony across the world and across trade finance. And so the approach there seems to be at this point to be really friendly and encouraging of US dollar stablecoins. Whereas when you look at the European approach, it seems to view stablecoins as a potential consumer harm issue. So it's kind of the lens that which the regulation is designed is like, how do we protect people in case this thing goes wrong? And so you've got a really long, detailed rule list about how you protect people and prevent things from going wrong. And I think we'll see play out in the next 5 years, how that differentiated approach to regulation kind of impacts on the market cap of stablecoins denominated in dollars and euros respectively. But I think it's going to be a really interesting sort of geopolitical and global kind of trade finance issue that we watch play out ahead of us, all kind of stemming from our industry, which is really cool.
How real do you think these concerns are from a regulatory perspective? Because you have somebody like Senator Warren, who recently is warning that stablecoins pose a national security risk. Although, if you look at the traditional banking world, you have money laundering that is much more common. So, I mean, are you viewing these concerns legitimate?
Yeah, I think there is legitimacy, um, but I think they're concerns that can be and will be addressed. So I think that there are legitimate concerns around making sure that when people believe they're holding, a stable dollar, it is stable, it's backed by something, there are proper reserves. Um, I think that is a legitimate concern. Um, but I think the rules that are developing to make sure that's the case are kind of sufficient to kind of protect consumers, but also to enable the technology to work and do what it's good at, which is facilitating payments and settlement, instantly and across borders. Like it's an incredibly powerful new technology, and what we don't want to see is policymakers kind of cram it down for fear of something which might never happen, and for concerns which actually can be addressed, and which are being addressed.
And any hesitation has not stopped BlackRock or Fidelity or Stripe. BlackRock is issuing tokenized funds. Stripe just added USDC payouts. Fidelity is reportedly exploring their own stablecoin. What do you make of this? What appears to be a stablecoin arms race?
Well, I think it's amazing. I think it's really exciting. Having been in the space for so long, like it hasn't always been this way. Stablecoins was a sleepy backwater of Web3 for a couple of years, and now it's like the most exciting place to be. But I do think it's an arms race. I do think it's inevitable. Big banks will issue stablecoins off their balance sheet. We're already starting to see it. You've mentioned a few names there, major traditional finance players who are either issuing or getting involved in the space. Same in Europe. Societe Generale in Europe has issued their own stablecoin. Um, but I don't think it's a winner takes all market. So I don't think like bank issued stable coins are like a doomsday scenario for existing stablecoin issuers. Quite the contrary. Like I think, the TAM, the total addressable market for stable coins is the total addressable market of all money and all payments, which is, multiples of global GDP. It's an enormous space and a space for a lot of people to create a lot of value. What I think we will see is stablecoins disappearing into the back end, into infrastructure. That's sort of our core thesis. That's my core thesis is we will see stablecoins which are issued by a multitude of different players. Maybe there'll be thousands of different stablecoins. And when you deposit into an application, that application will hold your balance in one of those stablecoins, but you won't necessarily care which stablecoin it is. So if you deposit into JP Morgan, that will be a JP Morgan stablecoin. If it's a neobank, that might be a Circle stablecoin because they've not built their own. And what I think is, the stablecoin becomes the infrastructure. And what you care about as a customer, as a business, or as a consumer is just what the application lets you do with that. How much yield are they giving you? What's the interest rate? Like your savings account, what value added products do they provide you? But I think what you won't really care about is the infrastructure beneath that. I don't think you'll really care about who is the issuer of that stable coin which your balance is held in.
Do you see a place for decentralized alternatives?
I do. I do. I think there is a design space for decentralized stablecoins, which are used by particular applications where, the customers and consumers understand kind of the nature of that application. So you understand that risk profile is different if you're using something completely decentralized without a centralized team, compliance, help desk, to if you're using a centralized party who is directly regulated and overseen. Um, but I think, yeah, I think there is a place for it, and it offers a broader design space to offer quite, interesting, valuable products to people. I just think it's kind of different to the core stablecoin market as it's growing up with traditional financial players.
We talked about some of the technical and regulatory hurdles on the stablecoin side, but what about for Harbor? What kind of hurdles did you face getting Harbor off the ground?
Yeah, quite a few. Um, so you think about 2 years ago, it was even harder then for, a company working with digital assets, crypto to get access to banking rails. That was a really big challenge. So to build our product, we needed a partner bank, an agreement with them to integrate to be able to issue virtual accounts and move, process payments in the banking system. That's a hard thing for any fintech. But then when you say you're working with this new stablecoin technology, it was really difficult, and we had spoke to a lot of people and spent a lot of time trying to get that. Thankfully, that's getting better now, which is a good sign for the whole industry. But that was a big blocker for a long time when we started out. And then the regulatory stuff still. The rules change. The rules in the UK have changed a couple of times since we started building. The rules in Europe have changed. Like the registration and licensing process has changed twice. So that ever-changing regulation present, you've got to kind of reapply. You've got to stay on top of it. You've got to kind of understand how things are changing. So that's been a big challenge as well. But again, we're starting to get to the point where that will stop changing as much, because the long-term rule sets are coming in, with MiCA in Europe and legislation in the UK and the US. So new companies coming through won't have the same headaches as us, as having to constantly adapt to this changing environment. But that was tough for us.
When you look at innovation and as you're innovating new products, do you sometimes get frustrated by the fact that you have to worry so much about the compliance piece? Because obviously you're dealing with TradFi here as well.
Yeah, there are times when I really envy fully decentralized projects that don't need to worry about that. They can just focus on building great product and building great customer experiences. There's this whole kind of significant, detailed side of our business where we do have to spend a lot of time doing quite boring stuff, like making sure we're doing KYC properly, we're monitoring transactions properly, managing liquidity, we're reporting to regulators. It's a lot of overhead, but I've always seen it as the price of playing in the market. I think it always felt inevitable to us that stablecoin payments would attract regulation, and it's just something you have to do to access this market.
What is the long-term vision for Harbor? Are you looking to expand potentially into lending, savings, or maybe other financial services?
So the next big move for us is global payments. So we've spent a lot of time thinking about how can we remove the friction for businesses in particular who want to send payments in and out of other countries around the world. And what's the model for doing that really effectively? Because we don't think anybody's nailed that yet. And so for us, the long-term vision is being, the infrastructure, which is built with stablecoins in the back end, which is enabling global money movement, which if you're a consumer, you probably don't really know that it's there. But it's behind the scenes, it's humming along, and it's facilitating, massive improvements in efficiency for people all over the world, particularly emerging economies who want to access the global market.
When you look at the entire crypto blockchain industry, what trends are exciting you the most right now?
Obviously, stablecoins, that's super biased. DeFi in general, I'm really excited about kind of the core DeFi primitives, which have been battle tested now, like things like Aave and others. I'm really excited about the state of the infrastructure. So, blockchains like Polkadot who are facilitating transfers of dollars on chain for less than a penny. That's like staggering efficiency, and that level of efficiency can serve the volume which is needed to process banking and payments at TradFi volumes. And so that's really exciting to see. And these people have been working on these primitives for years, constantly innovating at the base layer, and the fruits of that are starting to be seen. And for us, that's really exciting, because that's what we then build on and build our products and services on.
I think it'll still take a little bit of time for the blue chips like Aave to really gain mainstream adoption, but I'm all here for it, and it's definitely exciting times. Final question for you, James. If you were a betting man and you had to bet on one major transformation in the global financial system over the next 10 years, what would it be?
10-year time horizon, I would say we will all interact with stablecoins at some point, but most of us will be unaware of it. So I think a lot of what we do in our day-to-day financial lives, there will be a stablecoin involved, whether that's we're sending money abroad, or whether that's because we're executing a trade and the settlement's happening behind the scenes, or whether it's because we're actually sending peer-to-peer payments. Whatever it, I think we will all be touching them, interacting with them, but I think in most cases it will be visible to us as part of the fabric of the financial system, and that's where we're trying to get to, and that's where my money and time is going.
Looking forward to seeing it all play out. James, this was fantastic. You can tell that stablecoins are moving from a crypto niche to the backbone of the global finance system. And it sounds like Harbor is helping to pave the way for that. For folks that want to try it out or follow your work, where can they find you?
Yeah, sure. Well, so it's just harbor.fi, web URL, harbor.fi on X. And yeah, just follow us, check it out. The product's open, you can use it, experience instant seamless bank to wallet transfers.
Well, thanks so much for your time, James. I'll be sure to include those links in the description. And for those watching, if you found this video informative, please subscribe to the channel, like the video, and give James a follow. Till next time.
Appreciate it. Good to chat.